Good. Hello everybody out there. It's showtime again. Yeah, we are having our weekly trading show to kick off our investment week again. So on every Monday morning US time, we are starting off this nice and very interesting trading show. So good morning to USA, good afternoon to Europe, and good evening to Southeast Asia. Yes, today on board again, Rudi, asset manager in Frankfurt, Tokyo, Zurich, Martin, portfolio manager in Düsseldorf and also Zurich, and me, Gilbert. I'm the head of xTasyTraders Yard, and somehow a little bit the brain behind it, and also trader. Yeah, so let's start off with some nice symbols, some analysis. I'm just jumping into the risk disclaimer. Yeah, just to mention it, future stock and options forex trading involves substantial risks. Traders might lose their original investment and even more. The past results are no indications for future performance. All information or analysis, what we are doing is just for educational purposes. And of course, there might be a conflict of interest. Since we discuss various symbols, you can assume that we are invested already in some of them. So just to let you know about this risk disclaimer. Good. So then let's go into the first symbol I would like to introduce. It's the Nasdaq Futures. So of course, in the past, there was somehow a fear of inflation overheating, so we saw some volatile phases in the last few weeks, but the broader fundamentals are still remaining strong. So in the earnings, there is some or many rising earnings estimates. The broader economics reopening now, and this also could help that the US GDP growth can be the best in the last 35 years. So the estimates are really promising looking. The recent pullbacks, they could be somehow a healthy recalibration. And yeah, just to see there, the S&P 500 is up around 25% compared to the pre-pandemic highs, and the Nasdaq already jumped up about 40% about the pre-pandemic highs. And so just let's go into the chart, and let's have a look about the Nasdaq Futures I see there and how I would see the current situation. As already mentioned in the past, we have a very sharp rise here. We are very bullish in the last few months, and this is always where I would like to point it out. This is the climatic distance indicator, and as you see, we are extremely climatic there. But as already mentioned, the economics view are very good for the next few months and years. And so this might be maybe end up sometimes in a sideways phase, but currently we are very bullish. Just to look at it, here we see some marks in the chart where we always see at around the SMA 20 that we had good reactions, corrections back to the SMA 20s, and then pull into the long direction, push into the long direction. Here we also see at the SMA 8 basically a very good reaction. And what we see currently here is also 2 months ago that this candle is also very bullish on a monthly base coming out of the SMA 8. We are just in the area of the last relative high. We already broke it last month, and also this candle looks quite bullish currently. This is the monthly view. The weekly looks also quite similar. That we had here in the past touchdown to the SMA 200. This was at the beginning of the pandemic last year, and now we also see very good reactions here at this point. And also we see here very bullish candles. Also this last candle last week, we had a correction back to the SMA 20, and we also see here this candle, this single bar retracement, as we call it in location point trading, and this is for me also after a smooth correction here, very bullish sign to see good opportunities for the Nasdaq. Okay, just the last one here, also very interesting that we had here pullbacks exactly to the EMA 130 in this area here, and we have a reaction, basically a double bottom at this point here, and now it's gonna get interesting how this could work out, having here the possibility if the market goes up here, comes into a correction, then it would be a good point to go long at this price is at around 13,500, 13,600, something like this. There might be good entry points for the Nasdaq if you are not already in since this last low here. Okay, good. So this was basically the Nasdaq. And yeah, I'm just forwarding over to you, Martin, to have a look here. Good. Martin, make presenter. Yes.
Great. So here we are. Just for a quick starter, I want to take a look at the S&P 500. I think we had a bigger analysis in the last 2 weeks, like last Monday and the Monday before, and so I just want to have a really quick view on the current situation. What we see here is that last week we bounced off the 50-day moving average again. We did it in the week before, like in the same manner. We tested the MA50, and last week again tested the MA50, had a bullish candle here. The breakout on Thursday was really strong, really nice breakout. So this was the first place to get aggressively long in the S&P 500. I already told you last time that my price target for the S&P is still around 4,400. And what's developing here now is like a nice triangle. We do have this resistance level above here for 175. This is a big resistance level, but if the price manages to move above the resistance, there's still a lot of room to run, I guess. So, and if we take a closer look in the 4-hour chart, we see that we started the day today really bullish. We came from down here and are up at the moment around 20 points in the S&P 500. And what I really like here is like this formation here. We do have like this nice triangle. So, and if the price manages to move above this resistance here for 180, for 185, somewhere around here, we have room to run. The first target would of course be up here, the last high. This is around 4,235 somewhere. And if we go for the bigger target, we just take the height of the triangle and put it on the breakout level, and we come to price levels around 4,320. So this would be the level for the move off of this triangle, somewhere around 4,300 points. I really like the level, but as I told you, longer term, I see the S&P going to 4,400. So actually the market is still bullish. It's still in a bullish condition. And this is why I'm still looking for long entries in the single stocks. What I like to do normally is to take a closer look at the broader market, and as long as the broader market is still bullish, I'm preferring long setups in the market. So if we see a turnaround in the indices and we see that there's a beginning downtrend and we have a weakening market, I will be looking for short setups as well, but it's not the time yet in my opinion. So what I prepared for today, the first of the two stocks I prepared is the MSCI. I really like this one in the long term. Yeah, if we take a look at the monthly chart, this is really a great trend. Goes from the left downside to the right up. This is the trend. Yeah, and I really like this one. So this like logarithmic scale. If we take a look at this one in the linear, you can see how the price is reacting to higher prices. It's still moving with momentum, and I really like these momentum moves. I like the retracements because the retracements always are finished at important levels. Yeah, support level here, retracement is finished, next up move, correction, support level here, retracement is finished, next up move. So, and at the moment we are in the retracement here, and we saw a reaction at this support level here from the monthly chart. We could see the same. Let's switch this back to logarithmic. So we can see the same if we take a look at the weekly chart. Oh, just wait a moment. Okay. I guess we'll be back soon. Here we are. Okay, so in the weekly chart, we see that the RSI is still above 50. I like this situation. I like the RSI above 50 in the weekly chart. And I also like the movement of the weekly chart. We can see this nice, let me take a little drawing tool here. We can see these nice moves here. So we have like big momentum moves to the upside, and we have smaller corrections to the downside. Big momentum move to the upside, smaller correction to the downside. Big momentum move to the upside, and now we are in this correction. And I really like this place because this is like the 10 moving average in the weekly chart. It's really a strong support level most of the time, and it's similar to the 50-day moving average in the daily chart. So the blue line here is 50-day moving average, and we see that the market tested this level and buyers came right back in again. So this is really like still a very, very bullish situation. Also, we do have these supports down here, coming from these two highs in the daily chart and from this high in the daily chart. So the retracement level is really nice. I like this retracement level. And I just told you I like the stock for the long-term investment because it has this smooth uptrend. So that's a great stock for a longer-term investment. But from time to time, there are good setups for trades as well, and mostly they come after a good correction. Yeah, one of the setups I like most is drawn here with these red arrows, with the green arrows down here. And every time these green arrows appear, it's a nice situation for the next move to the upside. We had it in this correction here, we had it in this correction here, we had it in this correction, in the last bigger correction as well, and now we do have it here as well. So this is one of my most profitable setups I'm looking for in the market, getting into a strong stock after a good retracement. And that's just what we are seeing here in MSCI. What I also did is I do have a comparison chart here where I compared the move like with this COVID breakdown, with this COVID crash, COVID panic move here, and from there to the upside, all this, these retracement moves we got, the new trend we got, and I'm comparing it to the S&P Global. It's the white line, Moody's, it's the green line here, and we also have the S&P 500, this is the orange line, and we see that the MSCI moves a little bit more smooth, so the retracements are a little bit smaller, and the stock overall is stronger than the rest of this market. And that's what I really like. I like buying strong stocks, and if I'm looking for short setups, selling weak stocks. So this one is really strong. The level we find is really good, and if it manages to go above these last two highs here, this might be a good place for a long position. So the risk we would take is maybe somewhere down here. If the market moves against us, we have to get rid of the stock somewhere down here. Target levels are up here. So we see the risk we take compared to the profit we can make is quite nice. Quite a small risk for a big profit. That's the kind of setups I like. Okay, that's it so far for the first stock. If we have time in the end, I would show the second stock as well. But at first, I'm moving the mic to Rudi.
Yeah, here I am. Okay. So if you're able to switch the screen to me, or if I
yes,
have
of course. You got it.
Give me a second. I have something, yeah, really interesting in my eyes. I see something with Monster Beverage. We have a strong move there and we have a weak move there. This is something I really appreciate if the market is showing us such a picture, because this indicates to me which where's the good thing and where's the thing we should wait for. But let's check the chart. That makes it a little bit easier to follow. So I will switch off my cam so that you can have the full screen with the charts. So what I'm talking about, you can see here Monster Beverage was a long-term uptrend here in the weekly chart on the upper left hand. You can see we reached the 100 level, nearly, not necessarily exactly, but roughly around this level. But from that day, from that week, it was exactly the time around end of April, early in May, we had a plunge to the downside. And this is a really interesting thing, because this is something I easily see in the market. You can easily see this is typically the situation when you say, I missed this opportunity, or too late to enter, or too late to leave the market if you had a long position at that days. But the good thing is, it's really eye-catching. So at the first glance, when checking through the charts, I'm normally doing this really, really quick. You can easily see this strong momentum moves, and you can easily compare them to weaker parts of the chart. So if you see this in the daily chart, and I will switch now to an intraday chart, for example, a 4-hourly or whatever it is, no matter what time frame, but you can see the details here a little bit more. And if you see things like this, you can easily understand, this one is the fast move here to the downside. And you can see from here beginning, this was the lowest point here, it was roughly at 88.33. And from that point, we had an uptrend, definitely an uptrend, because currently the market is here. So if you think, is it really up? Yes, it's really up. So no worries about that one. So the decision about the market side is easy. This one was a strong one. This one is the weak one. So we want to trade the strong movements. That's always the same. So if you see a really big difference between one movement or one side, the bullish side, the bearish side, and the other, then you can say, okay, which one is the better one? Which one do you want to stick with? So in my case, it's quite easy. I will just follow this movement. So normally, typically, this is not coming alone. You have most of the time at least another one. And just to go a little bit theoretical, if you see a strong move into one direction and a counter move into the other, you should expect that the market will continue at least one more time. Sometimes it's even more. Just another example are something like impulsive moves. So if you see something following several times, this is also typical. But also in this case, if you have a first strong move, something shaky or ABC in the middle, then you can at least expect one more or sometimes even more for the downside. So this is a very, very typical situation, and that's the reason why we are expecting a continuation of this downside here. We still think that's not over yet. So at least one other is coming. And maybe, depending on how far it will go to the downside, maybe there's another one and a continuation to the downside. But this is not given. Here we can have another decision whether this is corrective or is whether this is a counter move, let's say something reshaped. Some people remember the Corona situation. Sometimes the market is coming back like this, but this is not to decide now, because first of all we need to go here in a continuation of the first move here, like I've mentioned before. So what we expect is that the market will continue to the downside, and this is something we really love to trade, because the next move should be really fast. And of course, not in 100% of all cases, this trading style is working. Sometimes the market is turning around and saying, haha, not you today, we are turning. But the good thing is we can easily understand this. But because when the market is really following our plan, this movement should be quite similar to this. Ideal in the same speed, ideal in the same size, ideal in the same manner or pattern, not too much like this, for example. So if you wish for this, but if you get this, you easily understand, okay, we are not getting what we wanted, so we can take profit here somewhere, or having a small loss depending where you enter the market. And yeah, it's not what I want to, but I don't want to have my money too long into the market. I want to get out and have a new position. By the way, you can see this is something a little bit intraday, but you can easily understand it's the same on the daily chart here. You can, of course, also see it like this. It's exactly the same pattern. So if you don't want to stick with an intraday chart, or you're not able to because you're data-wise or whatever, you can also see this pattern here. And this behavior is not only in this, you can also see it in some overview patterns. So for example here, where you can see, okay, now it's decided this is the strong one, this is the weak one. A continuation, no matter how far it is, but a continuation into the strong direction is most probable, and until the next ABC and the continuation. So you can see it's not a matter of time frame. You can use this intraday. We trade this on very low time frames as well. You can easily see here as well. It's a typical corrective pattern and a continuation, and roughly the same size like this. It is roughly the same here on this side. So you can see, if your eyes are trained on this, you can easily find this 1,000 times a day, or yeah, let's say a week or whatever, depending how many stocks or instruments you're screening. So my trading idea is to sell short this market. There's two approaches how to open a position. A very easy one, not too much thinking, is to check where's the last high. It's this one. The previous high is this one. The low in between is this one. So a trading trigger, in this case for the short side, would be this, using a sell stop order, for example, just to enter the market here on the short side, and to expect something roughly similar for the next down move. And you can see, okay, roughly similar would be a one-on-one projection, 100%, sorry, which would lead us roughly to, let's say, 82.40 roughly. And in a similar, not exactly the same, but in a similar speed like we've seen here before. So this is what we think about this market. A typical stop situation could be the last high, because what we have here is a rising lows, rising highs. So what we don't need is a new higher high. So definitely this is worth a stop for this trade. And we can add some extra spice here for the risk-reward ratio. If you don't set the stop at this level, we can reduce this a little bit by the use of Fibonacci. This is our entry point, the entry level, and nearly 80%, but 78.6% setback. This is also worth a stop, because practically we know that when the market is reaching this level, we can expect that we also reach this level, so we will be stopped out anyway. So we can save this rest of amount and have a really good risk-reward ratio on this one. So at least it's a little bit better. You can see the difference in this case. If we prepare this with a trade, for example, the entry is below this level roughly. The stop, the original stop for many people, is this. and the target would be this. And in this case, you can easily see we have a 2-on-1 risk-reward ratio. It's quite okay. We can trade this, no problem at all. With 360 stocks in this case selling short. It's just on euro, but it's of course the same with the US dollar. I have to switch this. I'm really sorry about that, but you can easily understand just by reading the numbers what is meant about. You can of course and should use the position size useful for you, but you can see only switching here from that stop level to this stop level. It's not a big amount. Everybody would say, yeah, but it's not a big deal. Yeah, it is. Instead of 2 against 1, it's now nearly 3 against 1 just by using a little bit a closer stop in this case. So this is something I like to trade. This is something we prefer to do. Of course, you can apply some other techniques to open an entry here nearby, which is strongly increasing your risk-reward ratio. That's really awesome. But on the other side is definitely costing the chance of opportunity. It can be give you a negative, or most of the time a negative input into how big is the chance that this is going through, because we need to see this corrective pattern to end, and this is some kind, not a proof, not an evidence, but a good indication when we are going through this level that this counter movement is over and we will continue to the downside. So I think this is worth it to wait. So that's from me from this side. I think this is a really nice trading opportunity. It's not only useful in this case, but you can also use this in many other trades depending on your preferred time scale or time frame and market. But in this case, Monster Beverage is it. So this is my idea for this part. So let's switch back to, I think Gilbert has something for us. Quite sure he's well prepared.
Yes, I am.
Can you grab the screen, or do I need to do something?
No, I'm just taking it over. It's fine.
Okay.
Good. I guess you should see it already. Next symbol I would like to discuss is Adobe. Yeah, we all know Adobe Creative Cloud, the producer of Photoshop, Illustrator, and so on. So they are quite successful. But this year, basically in Q1, they beat all the estimates they had and raised its guidance. The sales estimates for this year basically is that they will increase the sales for about 20%. And so this, of course, estimated, and for 2022, there should be a further increase of 14%, which is, of course, also estimated. The adjusted earnings expectations are to grow for 18% in 2021 and further 15% in 2022. So from rating recommendations, out of 15, 13 of them are giving Adobe a strong buy recommendation. Of course, this should be at least a reason to look into Adobe a little bit closer. So what do we see here in Adobe? Let's have a look at the monthly chart. Yeah, of course, raising. And we see here also that Adobe also reacts very good to the SMA 20 line. We always have good reactions out of that after smooth corrections here. Out of the SMA 20, we always have some good reactions. In the last time, we saw here a correction into the sideways. So here, basically, there was a correction, very smooth. But what I like here, in addition to the estimations of the fundamentals, is this candle here, which move it a little bit over, where we had a reaction at the SMA 8. So looking, and we had a continuation of that in the past. So, okay, let's have a look into the weekly chart. And this is also what I'm liking very much on this from the technical point of view, we also see here a touchdown to the EMA 130. We have a up move, and then Adobe started to get into the correction, and this is basically the crisscross around the SMA 20, what I'm always talking about, where a stock goes into the sideways phase. We have here a nice pattern coming out of the Bollingers with a reversal bar, and it went up, broke out to these two relative highs in the past. Now we see a correction, and what I'm liking most now on that are these two candles here. These are single bar retracements at the SMA 20, and this is a so-called trampoline pattern in the location point trading. That means we never made it to really see some reactions, or it always went back to the outer Bollinger Bands, had some reactions here, but this one here, this is very often a good sign, this that you see already at this point that the stock might break out through these levels here, what we see here. This is always an indication, a very early indication, and of course, if you see something like this, there are sometimes very sharp moves are following, either in the short direction or the long direction, but it depends on the candle here. So we are on the weekly chart here, and of course the entry would be here at this point at about 500, 497, 98, and the stop needs to be here at 466. About this 460, 465. Let's have a short look into the daily chart. Yeah, if you are looking to get into Adobe on the daily base, we see here also reactions at the SMA 200. So it was tested a second time. We went out of the SMA 200, and now it would be good to really get much tighter into Adobe, not on the weekly base, even at the daily base. If you would wait that the market comes up here, goes back again, and then if we are seeing a reversal at this price at about 492 and seeing a reversal on a daily base, then it would be a good indication to get in already here at this point. Yeah. Just see the whole picture here. This would be in, I'm waiting for that to see a reversal at this price here. A single bar retracement or a double bar retracement, and this would then be a good point here. Yeah, that's from Adobe. Martin, what is your next one?
Yes, would you hand over the screen, please?
Yeah.
Great, thanks. So I have a smaller stock today. This is Tattoo Chef. I think most of the viewers might not even know the company because it's a quite new company. It came out of a SPAC merger last year. And what they are doing is they're preparing like vegan and vegetarian food. So they're doing plant-based foods like Beyond Meat does it, but the products are a little bit different. But what I like here is at first I like the story because the demand is really going up. They had some new products in Target, in the Target stores last quarter, and they were nearly all of the time like sold out. They had 6 bowls that they're selling new in Target stores, and it was really hard to get them because people like these products so much that they're very fast sold out. So, and what's the case here is actually SPACs have been really hot last year. Yeah, SPACs were like the hottest investment that you could find, and normally a SPAC IPO is around $10, like you see it here. This is the pre-merger price here, around moving around $10. And at the end of the last year, SPACs were so hot that even SPACs that didn't have a target yet had premiums of around 30%, sometimes even 40%. So the shares were traded for $13, $14, even though investors didn't even know what might be the target company for a reverse merger. And so in the SPAC mania, of course, also Tattooed Chef, the stock from Tattooed Chef, profited a lot. So the high was nearly at $30 a share, but this was after the merger. So what you can see is that there's really a big interest in this market. Investors were willing to pay a lot of money for these stocks, and it's typically quite a small stock. They do have a market capitalization of, I think, $1.5 billion, somewhere around that. Suddenly, in this year, the beginning of this year, SPACs really fell out of favor. I think the reason is because there were just simply too many SPACs searching for merger candidates, and the prices they paid for these private companies to take them over or partly take them over simply were too high. So investors were a little bit concerned about the value they are getting for their stocks, and some of the deals were not really good. So this brought the whole SPAC market completely out of favor, and I think that's the reason why Tattooed Chef is down so much from the highs. If we take a look here, like just from the last high, from the high of this year to the low, this was a retracement of more than 40%. So that's really a big move. But in the last few days, we see investors coming back into these stocks. So we had like a phase of falling highs and lows from the middle of January, starting in the middle of January. But now we're in a situation where we get consecutive higher highs here. So I really like this. We had the first breakout here, and I like this breakout level because the price was moving above the last high, and the price was moving above the 50-day moving average as well. And now this big move continues. Maybe one of the reasons is because Tattooed Chef acquired Foods of New Mexico. So they are really building up their brand and reaching a lot of more customers, having bigger targets for the future. And the growth is really good as well. So in the last quarter, they had a revenue growth of nearly 60% year over year. And I'm expecting this growth to continue. So what we do have here is like a really nice growth stock. It's a growth company. And as Gilbert said in the beginning, of course, there are inflation fears in the market, and these inflation fears also brought the prices of growth stocks really strong to the downside. And that's what happened here as well. So we do have the combination of people not liking SPACs anymore, and investors being afraid of beginning inflation that really put pressure on the stock. But I think the pressure was too much. It was going down too much. I like the level where the movement stopped. It's like a big buy level down here, a big support level. And I like the momentum with which the stock took back the 50-day moving average. So what I want to see now is a continuation move. We had this retracement here 3 days ago, and the rest of the week was strong as well. If you take a look at the pre-market and post-market prices, you can see that this candle actually post-market ended up here somewhere around 2050-ish. So that's nearly the same level now. If we see a continuation today, this would be a strong breakout to the upside, and I really like this setup. I think the stock could rally in the range to $24 quite fast. So this was something of a momentum play. If you want to take it in the short term, I think you have to work with tight stops, not risking too much money on this trade, and just looking for the momentum to the upside. If you want to take it as an investment, what I also like very much, because I think the company could grow like 200-300% over the next 2 or 3 years. So you could, of course, take the wider stop down here, but then the targets would be above $30, I think, that are really realistic. For a growth stock, if we take a look at the price to sales ratio, it's below 8 at the moment, and I think this is still quite cheap, and so the company might be a little bit undervalued at the moment. And so I think this is a nice setup for a short-term trade to profit from the running momentum, as well as a long-term trade profiting from the good perspective of the company. Of course, long-term, you always have to have in mind that maybe some bigger competitors like Kraft Foods or somebody like that might move into this market as well, and this might not be too good for Tattoo Chef because they are still small, they don't have so much money, and if a bigger competitor enters this space of plant-based food, this might be a problem for Tattoo Chef. So this is what you have to have in mind, actually. But at the moment, I really like the setup. And if the stock makes the breakout to the upside, it also breaks above the 200-day moving average, and this is also a strong buy sign normally. So that's why I really like Tattoo Chef. Maybe what they could do in the future is inventing better packages, because at the moment they still have like these one-time use, single-use packages that people throw away, and I think a lot of vegetarians or vegan food eaters, they really like eco-friendly packaging, and maybe this would be a big step for Tattoo Chef as well. But that's music on the future, and yeah, we will see how it works out. But I really like the level, I really like the stock, I like the story, so this is why I wanted to show it to you today. And yeah, that's it so far from my side. Rudi, do you have a second stock you want to talk about for us?
Of course I have. Definitely.
Let me see if I can take...
Yes. And I can, let me switch to the screen and then I can tell you what I'm talking about. You have to push me the screen share, I guess.
Yeah, let me see.
Because I don't have any access. This is...
Do you have it now? Of course.
I have it now. Yes, wonderful. You're doing a great job. And here we go. Yes, US Bankcorp is my next one. And I mentioned before, sometimes I'm looking for a really strong movement. I prefer to see something pushing really strong into one direction and really shaky or counter trend like a corrective pattern like into the other direction. Sometimes you can see it really obvious, but on the other side it takes some training for your eyes, and on the other side you don't see it all the time. So I have another approach which I want to tell you now, which is a little bit for the easy traders, to be honest, for all of the lazy guys and girls outside not wanting to screen through all the markets. We have the computer, of course, and the computer can help us to screen something, and we had something that I want to share with you. So let me turn off the camera so that you can follow this easily. So in this case, we also have, just to mention, is a strong move here to the downside in the 4-hourly chart, but I'm not picking this up because the counter move is not corrective enough in my eyes. It seems a little bit strong. in the current perspective. Maybe this will change in the near future, but this is not what I want to talk about. In this case, I will talk about the weekly chart in this case. So it's a little bit slower than the other one, Monster Beverage before, and what we've seen so far. We have a situation here, a blue bar, which is called a Born bar. We invented it by ourselves. It's not a big deal, to be honest, but it's helping us a lot. And the funny thing is, this is not indicating where the direction, the next direction should be. Is it long or is it a short sell, for example? This is not indicating the future, or it's a rising price or not. No, in this case, it is the situation. The next one will be a fast one. So we are open to both directions. And this is the funny thing and maybe the good thing, because very often we have tons of bull signs of bullish trading signals, but we miss or we lack of short signals. So what happens when the market is turning around? We are 100% long in all our assets, and that's not a good deal. So we prefer to have some long and some short positions, so have for the bull market or the bear market, so that we are not in the very high risk with our portfolio. And this bond bar trading is really easy to apply. It's really easy. We normally see these blue things, and the next one, we don't know whether the market is breaking to the upside or the downside, but the next one should be a fast one. So you can see this before. Here, for example, with this one, after breaking here to the north, you can see, okay, the next few days or even weeks we're pushing hard into one direction. This is exactly what we want to see. And you can see here is roughly the same situation after breaking to the north. At that point, we would not know, or we did not know whether the market is pushing up or down. But knew is the wrong word, to be honest, but we had a good idea that when the market, if the market is going here to the upside or going to the lower end here, a strong move will continue. So that's exactly what we saw here. But I have to warn you, it's not a 100% sureness here in the market. We could see here in this case we had a push through the upper end of the blue trading range here, and the market, it was a nice try, but subsequently went into the stop. So it's not working in 100% of all cases, but we have a good situation here compared with the risk-reward ratio and the probability of having a profit. So in this case, I will bring this up so that you can read the lines here a little bit more. And what it's all meant about. You can see when the market is going here, then you can see a black line. So the entry for this is 62.48 in this case, and with a stop limit order, we are normally using a stop order because as long as the market is staying within this range, we don't need to do anything, and it can take sometimes some days, sometimes even weeks. We are not limiting this. It can be even for a long time, but regularly it's after a few days pushing through this levels here. And so we have a stop limit order, and you can see the green levels here is the limit of the stop limit order. Of course, you don't need to take this, but I recommend this because sometimes the market is gapping and you don't want to buy at any price. So this is limiting your risk that you get a moon price, which is obviously not where you want to buy this. The good news is we have a stop level, which is easily to see here with the red one. The long side stop is at that point. The target for that, of course, you can say, why shall I take profit? Never stop a running system or running market. But we normally use this as a take profit point. You can see it's really easy to reconcile here with the Fed line. 65.76 in this case, and there we take profit. And the good thing is you can see this is our risk, and this size here is our reward, and this is technically roughly 2.5 times the profit against the risk. But of course, comparing with sometimes you're not entering the market at the very lowest point, you can at least say it's better than 2 against 1, the risk-reward ratio, which is easily giving us good profits, because even with a profit rate roughly below 50%, this does not sound so well. Yeah, but it constantly gives me twice as much as I lose. So this is definitely something you can easily work. You can keep it in the background and can say, as long as I have some signals like this, you can say, okay, this is a nice one. So if the market is going to the upside, it's easy. What's on the downside? Of course, I don't need to mention all the levels here. Again, you can see just the numbers. You can see the recording later after the show here, or you can just do a screenshot and you can see all the levels to react. Some information about this here and this level here, the small little faded levels here. If we miss the entry because maybe there was a gap and we are starting the market here at that point, for example, if the market is going through this level before we have the position in our hands, we would cancel the long position because we don't want to see the market rushing here, coming back and give us an entry. No, this is not what we want to. If we are still in the near of the entry level, then it's okay. If the market is opening here, for example, and coming back, yes, we are still in. But when we are going through this thin level here, then we will cancel our long entry and say, okay, this time it was a miss. We did not get the position, but next time we might have another chance. On the other side, if we are breaking through this level on the long side, this would indicate that we cancel the short position. And you can understand, yes, indeed, we have still both in play. Even if we are long in this case, sometimes we are stopped out, but after that the market drops strongly and gives us a full profit here on the lower side. So as long as the market is not before that is going through this level, we would enter the market short. If we reach this level here, then we would stop. Not stop, we would cancel our short entry, our possible short entry, because the market decided, okay, we are pushing towards our target. So you can see that's a quite easy to use thing, especially because you have many of this even in lower time frames, daily charts, 4-hourly chart or hourly chart, or even lower time frames, whatever you like. In this case, US Bankcorp is something I would really have on my list, or we have it on our list already. So I don't want to talk anymore because Gilbert has something for us, I'm quite sure, so I want to hand over to him. Gilbert, what's your next?
Yes, thank you, Rudiger. Yeah, I'm switching over here to the next one, Nvidia. Give me a second. So here we are. Okay, some information about Nvidia. It's basically Nvidia. We know it. We know them. They are coming out of the chip space, so the supplies of the gaming sector with processors. They have earnings. Just be careful. 26th of May. But basically, the estimates for this year, they are just really phenomenal. We are expecting about 53% increase in the revenue for the upcoming year. In 2019, they had 11.7 billion of revenues. For the upcoming sales estimates, they have for a data center segment, what they support, they're estimating a growth for 124%. And a further increase for the next year for the gaming sector, 14% for the gaming sector. The estimates for next year are also very, very promising to increase the sales and the revenues, and also the adjusted earnings expectations are to grow about 36% for 21 and 13% for 22. So basically, this is also the same, similar to Adobe, that the ratings are really extremely high. So 16 strong buys out of 21 recommendations. Good. Then let's just have a look why I'm also now quite excited about Nvidia. On the monthly chart, we also see good reactions at the known points. Here, for example, after the pandemic crash, then there was a very good monthly candle, which is also a short correction back here, back to the SMA 20, and then just jumping out here. Now it went up, sideways phase, basically. Let's have a better line here. So we are in this area, and there was already a breakout, but as we know, many of these breakouts are failing. Here we see a very bullish candle also in this sideways phase on a monthly base, and we also saw the reaction afterwards. We also see here a very bullish candle in this one, and let's just jump over to the weekly chart, and this is my indication and my idea again. So we see here touchdown to the SMA to the EMA 130. Also here very good reaction at this point. So we see it's really working right as well. We have here a good point. Then we came into the sideways phase here. Around that we see here the breakout, but we see a good pullback to the SMA 20, and here the reaction. So this is again exactly that what I also showed before with Adobe. We have the up move, we have here the crisscrosses around the SMA 20, no real point at the SMA 22 with a good corrections, and then a jump out here. But now we see we went up, we didn't make it, or Nvidia didn't make it, came back, but now here in this area we exactly see this pattern, this double bar retracement, which gives a good indication that the market might jump out here to the long side. So this would be already a possibility to get into the market if the entering on the weekly base to get with an entry order here. The stop order will need to be placed here. On the daily chart, of course, to get in a little bit tighter into the market, we see the following. Just give me a second. Yes, so we see here, of course, this crisscrosses. Here, good indication also on the SMA 200, EMA 130. There's a cluster at this price here at about 540. So now what would be the next? We already see that we had a reaction here. We broke through the SMA 20 on a daily base. So what would need to be done now here is to wait that this candle is continuing today back to the SMA 20 here, that we see here a retracement in form of a single bar or double bar retracement somewhere at this point, and then if this happens somewhere around this price, is a good indication that Nvidia really makes it to get out of this sideways phase and goes up again into the north. Yeah, and of course, if you find an entry here, you have different entry and different stop levels. So of course, you're much tighter in this case. The entry would then be somewhere around 590, 600. It depends how this pattern, if it comes up, works out, and then stop always below the entry candle. Yeah, that's it. Good. I think we are quite done for today. Rudi, Martin.
It was a pleasure being here. Indeed,
Yeah,
it's half an hour before US bell, before the bell, so I think it's a perfect time to prepare for today's trading day. And I really hope you enjoyed what we gave you today, some ideas, some inspiration for the markets, for trading approaches, whatever you like to apply for yourself, for your trading for yourself. And I'm crossing my fingers for your trading for this week.
Yeah, Martin, any closing words from your side?
No. I'm just wishing all of you a good trading week. Have fun and know your time frame, know your risks, and act accordingly.
Yeah, I also thank you for the participation, watching us in our weekly show. We see us next Monday at the same time, Monday 2 p.m. in Europe, 8 8 a.m. in US and 10 p.m. in Japan. So, okay, then many thanks. See you. And yeah,
Bye-bye.
the next show. Goodbye. See you.
Bye-bye.